Hello friends, today I am going to talk about exposure draft of Ind AS 118 which deals with presentation and disclosure in financial statement. So this proposed standard aligned with IFRS 18 aims to enhance the transparency and consistency of financial reporting by introducing new classification for income and expenses. In this video, I will explore the key aspects of Ind AS 118, including the proposed subtotals for profit and loss and additional disclosure requirements. So, if you are new to this channel, request you to subscribe to the channel, or if you have not subscribed, request you to subscribe to the channel. So, let's dive in and understand the implication of this exposure draft for financial reporting in India. Ind AS 118, this accounting standard will be with effective from 1st April 2027. So in alignment with IFRS 18, the Institute of Chartered Accountants of India has issued an exposure draft of Ind AS 118, presentation and disclosure in financial statements, with a proposed effective date for annual reporting periods beginning on or after 1st April 2027. Actually, the IFRS 18 is getting implemented from 1st January 2027. Hence, Ind AS 118 will be with effective from 1st April 2027. This proposed standard is based on IFRS 18 with appropriate modification to reflect the Indian economy and regulatory environment. Right. So this accounting standard generally talks about the disclosure part. We'll understand now what are the difference between the current financial statement versus the upcoming or new financial statement which is described in Ind AS 118. But it's most about how you're going to disclose your numbers in the financial statement. Now, let's look into what are the requirements. What new requirements are proposed in Ind AS 118? So the first one is new categories of income and expenses, right? We'll do a more deep dive in this to understand what is the meaning of that. But as in bullet points I'm explaining now, the first one is new categories of income and expenses. Second, management defined performance measures. Okay. Third, new subtotals. And the last is enhanced aggregation and disaggregation requirement. New categories and subtotals in the statement of profit and loss. So today, if you look into any financial statement, the profit and loss account will have details about revenue. Then the expenses, under expenses, you will have raw material consumed, employee cost, depreciation cost, other expenses, financial cost, right? Now that is going to change under Ind AS 118. So let's see what are the changes. Categories for classifying income and expenses. So Ind AS 118 requires all items of income and expenses to be classified into newly defined 5 categories. So this Ind AS has defined 5 categories and all the income and expense has to be classified into these 5 categories. And what are the categories? First one is operating, second is financing, investing, income tax, discontinued operation. So by seeing the first 3, operating, financial, investing, you could connect to Ind AS 7 cash flow statement. I would say that it is similar to that, right? So like in cash flow statement, we have cash flow from operating, cash flow from financing, cash flow from investing. Now the same category is coming in presentation of financial statement. So what will happen when the shareholder will look into the cash flow and to the profit and loss account, they can correlate and understand the business in a better way. Okay. Now, to classify income and expense in the operating, investing and financial categories, an entity shall access whether it has a specified main business activity, right? So based on your business, based on your main objective of the business, you need to classify which is operating, which is financing, which is investing, right? For example, the interest income, what the bank earns from investment may be the operating income, whereas the same may not be for the manufacturing company. So business to business, the category will change. Same like we followed for cash flow statement. Now, what is the meaning of required subtotal? Ind AS 118 requires 2 new subtotals to enable analysis. So when you're preparing a profit and loss account, there will be separate subtotals so that gives more clarity to the shareholders. And what are these subtotals? The first one is operating profit and loss, and the second is profit or loss before financing and income taxes. So these 2 subtotals are mandate under Ind AS 118. So when you're preparing the financial statement, profit and loss account, these subtotals has to be disclosed on the profit and loss account. Let's try to understand Categorization of items of income and expense. So here we'll try to understand what will fall under operating, what will fall under financing, and what will fall under investing. How do we categorize the income and expense under these three different categories? The first one is operating category. So this category is intended to include items of income and expenses related to the entity's operation. So that is very clear, right? Operating category means it will include all operational related transactions, whether income or expense both together. Ind AS 118 described it as a residual category. So the operating category will comprise all income and expense not included within the investing, financing, income tax or discontinued operation categories. So it is very clear. So whatever transaction the business is happening, the first category is operating, second is investing, third is financing, right? So now if certain activities or certain income and expense doesn't classify under investing and financing, the accounting standard says that then by default it will fall under operating category, because this category is also called as residual category, because you are not able to classify under investing and financing or income tax or discontinued operation, right? So there are five category. If any particular income and expense doesn't fit to any four, right, then it will fall under operating category. If an entity's specified main business activity involves investing in assets, the related income and expense will be included in operating category, right? For example, real estate companies would be required to present rental income within the operating category because it is the real estate business, right? Whereas if the same investment real estate by a manufacturing company, then that will become a activity which will fall under investing because the manufacturing company has invested and that is written. But in case of real estate, it is their operating business. They build and then they give on rent or they sell, right? The expense in the operating category may be presented either by nature, which today most of the companies in India they follow. So they report it into expense wise like raw materials, salaries, advertising cost, or it could be function, which generally IFRS follows, right? Cost of sales, distribution cost, administration expenses, or on a mixed basis, some expenses by nature and other expenses by function on the face of the income statement, right? Now, a very important note here. The standard also mandates that companies classifying expenses by function must disclose the amount of depreciation, amortization, employee benefits, impairment losses, and inventory write-downs included within each line item in the operating category of the statement of profit and loss. That means if a company is not following nature concept, is following function concept, right, for disclosing. So under function, what points you have? Cost of sales, distribution cost, administration cost, or research and development cost. So under each heading you have to show separate details for depreciation, amortization, employee benefits, impairment loss, and inventory write down, right? So this is mandate, you can't exclude, you have to disclose that if you are following function method of disclosing the expenses or income. Investing categories. So this category includes income and expenses from assets that generate returns separately from a company's business activities, right? Business activities, your operating activities. Now, if you are investing somewhere, okay, you may have cost to invest, you may have income from that investment. So that will be shown under investing categories. Second is income and expenses from cash and cash equivalents and investment in associates and joint venture, right? Now, let's look into few examples. So example of items of income and expenses included in investing category. So what could be the example? Rental income arising from investment property. In the previous slide, I talked about that, right? If you are a manufacturing service industry, not connected to, making buildings like real estate, then the rental income will be a investing category income. Second, dividends from shares in other companies. So you have invested, you're getting dividend, it is investing category. Share of profit from associates and joint ventures, similarly investing activity. So if you can recall your cash flow statement, the same category applies here also. These are the items which you show under cash flow statement under investing activity, right? If you are getting in cash. The last one, income and expenses from unconsolidated subsidiaries, such as investment in subsidiaries held by an investment entity that are measured at fair value, right? Investments in subsidiaries in separate financial statement that are accounted. So these are also need to be reported under investing category. Now, one of the key criteria for an item of income or expense to be included in the investing category is that it should relate to assets that generate a return individually and largely independently of the entity's other resources. That means it is very clear that you have invested, you're getting a return. So it should be connected to that individual investment, and that investment should not have combination of other resources of the company, right? So if you see here, what it explains saying that income or expenses related to assets that an entity uses in combination to produce or supply goods or services do not generate a return individually. It should be individually. If it combines other resources, you can't classify under investing category, and largely independently of the entity's other resources, and shall be classified as an operating category, such as depreciation expenses, impairment losses or reversal of impairment losses, gain or loss on derecognition of plant, property and equipment, right? Interest income on financing to customers by banks. So this will not fall under investing categories because it has no relation to an individual asset, right? Only when you have an individual asset, you have invested and you're getting a return, or you are incurring expenses for that investment, those will be part of investing activities. If you are investing but it connects or combinedly takes other resources of the business, then it will fall under operating expenses. Financing category. This category includes income and expenses on liabilities arising from financial transactions, interest and expenses on any other liability. Okay, so there are two types of liability here. One is liabilities arising from financial transactions, and there is any other liability. So we'll see both examples. So liabilities arising from financial transaction includes issue of bonds or debentures redeemable in cash or entity's equity share. Liability under a supplier finance arrangement when the payable for goods or services is derecognized. Obligation for an entity to purchase its own shares. Loans raised by the company. Right? So these are few examples. Items of income and expenses related to these liabilities, such as interest expense on debt instrument issued, fair value gain or loss on liability designated as fair value, income or expense on derecognition of liability, and dividend on issued shares classified as liabilities shall be classified under this finance category. Again, I would suggest that whatever you do for cash flow statement, whatever items you consider for finance category or finance cash flow from financing activities, the same applies here, right? Only difference is that there you are reporting which are in cash in nature. Here you will be reporting cash plus accrual both together. Now, other liabilities include liabilities arising from transactions that do not involve only the raising of finance, such as payable for goods or services that will be settled in cash, right? Lease liabilities, defined benefit pension liabilities, decommissioning or asset restoration provisions, litigation provisions. So if you are paying any interest or there is any cost or expenses in connected to these liabilities in addition to the liability what you have created, okay, then those will be reported under financing categories. Have a look on the format which the companies are going to use under Ind AS 118. So the new format is here. So it starts with revenue. Okay, so when I say revenue, you can see on the right side it is the category. The category is operating, right? So you will have revenue from operations. So operating expenses, okay, analyzed by nature, function, or both as appropriate. It is option given to the company to use what they want. But yes, as I told you in the previous slide, if they use function, then there are different items like depreciation, amortization, and all that they need to disclose separately for each line item. Now, coming to the second part, before second part, you can see there is a subtotal, right? Operating profit or loss. And this is mandated under Ind AS 118 that you need to give this subtotal, right? Now, after operating profit or loss, what you are going to disclose? We are going to disclose about investing category, right? So what can be the example like share of profit or loss of equity accounted investees, income from other investments, interest income from cash and cash equivalent. So this will come under investing. Now then you have another subtotal which is called as profit or loss before financing and income tax, right? And these two new subtotals are added under Ind AS 118. After this, you are going to show about financing activity. So it will be interest expense on borrowing and lease liabilities, interest expense on pension liabilities, right? Then what you have profit or loss before income tax. Then as usual, income tax expenses. After income tax expenses, it is profit or loss from continuing operations. and then you have profit or loss from discontinued operation wherever required. After that, it will be profit and loss from the business, right? So this is the new structure which will be implemented under Ind AS 118, and every company has to follow this. The next change what Ind AS 118 is bringing is management defined performance measures, and I personally feel this is very important, and why I will explain you now. So management defined performance measures are defined as subtotal of income and expenses other than those specifically excluded by the standard or required to be disclosed or presented by Ind AS that a company uses in public communications outside financial statements to communicate to investors management review of an aspect of the financial performance of the company as a whole. So it has, if you see the annual report or if you see the press media conference, whatever the management does, sometimes they give different numbers which may not be, traceable in the financial statement, right? Because the calculation, the way of thought process of the management may be completely different. Sometimes you would have heard the word like adjusted EBITDA, right? Or adjusted profit and loss account. When they say adjusted, it could mean anything. There could be an extraordinary item, there could be a forex restatement which they want to adjust. So many management or many company, they come with their own formulas to define what is adjusted profit and loss account. So this accounting standard says very clear that if you are declaring such things in the media or in press or to your shareholders or to your investors, then you need to prepare a reconciliation about the number what you are talking to them with the number what is prepared in the financial statement or signed by the managing director or directors. Now, what this presentation and disclosure principles? Subtotal of income and expense that meets the definition of MPMs shall be disclosed as per the requirement of Ind AS 118, whether or not it is presented in the statement or profit and loss, in the profit and loss. The standard mandates that an entity must disclose management defined performance measures within a single note. The disclosure should include, okay, a reconciliation between each MPMs and the most directly comparable subtotal specified in Ind AS 118. Okay, as I explained you, from statement total to the total of what they declare to the shareholders, or any total or subtotal explicitly required by other Ind AS. This reconciliation must also show the income tax effect and impact on non-controlling interest for each reconciling item. So when you are declaring some different number to the shareholder, you reconcile, and any impact of the income tax on that, okay, has to be split and to be adjusted in that number, right? For today example, in the financial statement, when you show OCI, the interest portion on the OCI, sorry, the income tax portion on this OCI is reclassified. So similarly here, when you're doing the reconciliation for MPM, you have to reclassify the income tax impact on those numbers as well. A description explaining how each measures reflects management perspective and the method used to calculate it. A statement that the measures represents management's perspective on a specific aspect of the company's overall financial performance and may not be comparable to similarly labeled or described measures presented by other entities. The next change what Ind AS 118 talks about is enhanced requirements for aggregation and disaggregation of information. Okay. Sometimes it may happen that many management, they don't disclose the details even though it has a material impact. Okay. So this accounting standard makes very clear that you have to be transparent with your shareholders. You can't hide things by clubbing under one category, right? So if you see today's the financial statement, the primary financial statement in the left side, you can see here what it includes: your profit and loss account, balance sheet, cash flow statement, right? So PFS, that is primary financial statement, provides structured summaries of an entity's recognized asset, liabilities, equity, income, expense, and cash flow, which help in providing information useful to the users of financial statement, making comparison between entities and between reporting periods for the same entity, and identify items or areas about which additional information is disclosed in the notes, right? Now what we do in the financial statement, we will have notes, right, where we will refer each item and then we will give the breakup, right? So notes provides material information necessary to understand items included in primary financial statement. Okay, for example, disaggregated information about inventory, what we do: classification, such as work in progress and finished goods. We do that classification and so, right? If you see in P&L, we give change in inventory, opening stock, movement, and then closing stock. It supplements the PFS with other information to meet the objectives of the financial statement. In another word, that may not directly relate to a line item presented in the PFS, but that is otherwise necessary to provide user with useful information, right? Because if somebody read as inventory, that is not going to give complete transparency about inventory. So you need to break down and show that what this inventory contains. And if you are taking a provision for the inventory also, in bracket we have to mention that what is the provision or what is the provision for NRV, obsolescence and all that. So here one example, you can see an entity may disclose information about its exposure to various risks as well, like financial risks such as credit, liquidity and market risk. So left side if you see, the PFS is the more aggregated, that means in brief it is provided in the on the face of the financial statement, whereas notes talks about more disaggregated. So what Ind AS 118 is talking about here, because in the current financial statement also we do that, right? But what is more in Ind AS 118? It says that if something is more impacting the decision of the shareholders, okay, the number is quite material and you need to disclose separately, then you have to disclose. You can't keep it under, under clubbing under something and not disclosing or not transparent to the shareholder. Last part, Ind AS 118 mandates companies to aggregate or disaggregate information about individual transactions and other events for presentation in the PFS and accompanying notes. These requirements are guided by principles for aggregation and disaggregation of information, right? Now, this standard requires companies to ensure that items are grouped, that means aggregated, when they share similar characteristics and separated, disaggregated when they differ. This is what I was giving example, right? Aggregation and disaggregation are performed in a way that allows the primary financial statement and accompanying notes to effectively serve their intended purpose. Material information is not obstruct through inappropriate aggregation and disaggregation. Okay. Now, companies must disaggregate information whenever doing so results in material disclosure. If such information is not presented in PFS, it must be provided in notes. So it is very clear. This accounting standard focus on transparency. This accounting standard gives more clarity to the shareholders. It gives the reconciliation between what the management talks orally versus the financial statement. I would personally see that this is a better way to communicate to your shareholders, to present your financial statement and give more transparency to your shareholders. So that's it from my side. If you have not subscribed to the channel, request you to subscribe. If you find this video interesting, request you to like and share with your friends. Thank you.